So a healthy minority of folks who reach out to us at Choice Tax Relief um, will bring up the IRS Fresh Start Program in their free consultation. They often say something like, "Hey, can you guys get me into the Fresh Start Program?" And to be honest, that question doesn't really make much sense. And by the time you finish this video, I hope you'll understand why. But I can certainly understand where that question is coming from. Folks are asking that question because they saw or heard an ad somewhere in which some tax relief company was talking about the Fresh Start Program and how it's still going on and how you have to act fast before it goes away forever, in an attempt to create, in my opinion, some false sense of urgency. But in reality, the IRS Fresh Start Program isn't something that can go away. It's not a program that you can get into, so to speak. It was simply a set of changes the IRS made to things like notice of federal tax lien filing thresholds and offer and compromise calculations that the IRS announced in 3 news releases in 2011 and 2012. And as I will show you later in this video, the IRS used the phrase fresh start in these news releases. They said things like the IRS is making changes to such and such policy in order to help struggling taxpayers make a fresh start. That's it. That's all the IRS Fresh Start Program is. It's not some special program that wipes away everybody's tax debt like that. It's simply the phrase the IRS used to describe 8 taxpayer-friendly changes it made over 10 years ago to some of its policies, procedures, and programs having to do with tax relief and collections. But of course, that phrase the IRS used in these news releases announcing these changes, fresh start, it's quite a catchy phrase. And so around that time, we saw a lot of marketing departments and tax relief companies start using this IRS Fresh Start language in their marketing and advertisements. And in my opinion, a lot of these companies in their advertisements took the phrase fresh start and made it out to sound like something more than it was in order to convince folks to sign up with them. These companies made it sound like something like, hey, sign up with us and all your tax debt will be magically wiped away, in the baptismal waters of the IRS Fresh Start Program. In reality, the IRS Fresh Start Program simply made a few changes to some things, and I'm going to go over what they are in this video. But just for sake of example, it raised the threshold of debt for when the IRS will file a tax lien from $5,000 in unpaid taxes, penalties, and interest to $10,000. And yes, it also did make it a bit easier for some folks to qualify for an offer in compromise, which is a settlement with the government to settle one's tax debt for less than they owe. But it's not this, sweeping tax debt forgiveness program that some have made it out to be. So in this video, I'm going to set the record straight about the IRS Fresh Start Initiative, tell you exactly what the IRS Fresh Start Program actually did for taxpayers who owe. But first, a little about me. I'm Logan Alec. I have been a CPA for almost 12 years now. My company, Choice Tax Relief, helps taxpayers resolve their tax issues with the IRS and or their state. If you'd like to book a free consultation with a qualified tax professional, you can call my company, Choice Tax Relief, at 866-8000-TAX. That's 866-8000-829. Or you can fill out the quick form at choicetaxrelief.com. All that information is in the description below. So like I said, the IRS Fresh Start Program is a series of changes the IRS made in 2011 and 2012 to its practices, policies, and programs when it comes to tax collections and relief. And for the rest of this video, I'm basically just going to tell you what those changes are. Fresh Start change number 1, increased notice of federal tax lien filing threshold. On February 24, 2011, the IRS issued a news release 2011-20, that was titled, IRS announces new effort to help struggling taxpayers get a fresh start. Major changes made to a lien process. So from the get-go, the initial focus of the Fresh Start Program was really not so much making it easier for folks to get tax debt forgiveness, but simply making it so more people avoided getting a notice of federal tax lien filed against them in state or county records. And basically what a notice of federal tax lien is a notice to the general public filed in state and or county records that such and such person, in this case, by way of example, fashion personality Vanessa Williams, owes the United States a certain amount of money. In this case, by way of example, $369,249.89. So, for example, let's say a taxpayer wants to refinance their home with a new lender, but there's a notice of federal tax lien filed against them. This would make it pretty unlikely, unless the lien is subordinated or otherwise addressed, which is something that we do for clients, that a lender, it makes it unlikely that a lender would want to do that refi, right? Because if the borrower defaults, the IRS is ahead of them right? And there may not be enough left over on the sale of the house to make the lender whole. Truth is, in general, lenders and other kinds of creditors generally do not want to be in competition with the United States when it comes to your property. So previously, before the Fresh Start Initiative, the IRS would file a notice of federal tax lien on folks who owed them at least $5,000 in combined taxes, penalties, and interest. But the Fresh Start Initiative increased that threshold amount to $10,000, where it is today. Fresh Start change number 2. Eased requirements to obtain a lien withdrawal for a released lien. So today, when the IRS files a notice of federal tax lien, it does not go in your credit report. The credit bureaus changed their policies on this back in April 2018. But prior to that, a notice of federal tax lien would show up on that individual's credit report, which could obviously adversely affect their ability to obtain credit. This had other consequences as well. For example, many state licensing boards will not grant a license to somebody if they have a notice of federal tax lien filed against them. So let's say that an individual paid off their debt to the IRS. That was indicated on the notice of federal tax lien. Before the Fresh Start program, what would happen? The IRS would release the lien no later than 30 days after the taxpayer paid their liability. And this means that the lien no longer has any power or effect, right? The IRS no longer has any interest because the debt has been paid. But before April 2018, released tax liens still appeared on individuals' credit reports. The way to get them off of one's credit report was to have the notice of federal tax lien withdrawn. That would completely eliminate the lien from appearing on the individual's credit report as though it had never been filed in the first place. And prior to the Fresh Start program, the IRS would not necessarily withdraw a lien simply because it had been released. But the Fresh Start program changed that by making it so that a taxpayer who satisfied 3 conditions could get their lien withdrawn. Condition number 1, the tax liability stated on the lien had been satisfied. Condition number 2, the taxpayer is in filing compliance for at least the past 3 tax years, including all individual returns, business returns, and information returns. And condition number 3, the taxpayer is current on their estimated tax payments and federal tax deposits. So, thanks to the Fresh Start program, if a taxpayer meets these criteria, they can prepare Form 12277, complete the informational sections in sections 1 through 9, check the released box in section 10, check the 4th box in section 11, explain their situation in section 12, and they could sign the form and mail it to the IRS, and the IRS will withdraw their lien. Fresh Start change number 3. Eased requirements to obtain a lien withdrawal with a direct debit installment agreement. The Fresh Start program also made it so that compliant taxpayers who owe $25,000 or less to the IRS and who have never defaulted on an installment agreement with the IRS previously can enter into a full pay direct debit installment agreement with the IRS and have their notice of federal tax lien withdrawn once they make 3 consecutive direct debit payments under that installment agreement. They would use that same Form 12277, except this time they would indicate in Section 10 that the lien is still open, and in Section 11, they would check the 2 installment agreement boxes in Section 11. Fresh Start change number 4, expanded eligibility for streamlined small business installment agreements. Prior to the Fresh Start program, small businesses who owed less than $10,000 to the IRS were eligible to participate in a streamlined direct debit installment agreement program with the IRS. The Fresh Start program increased that amount to $25,000. Fresh Start change number 5, expanded eligibility for streamlined offers in compromise. So an offer in compromise is an agreement between the IRS and a taxpayer to settle the taxpayer's tax debt for less than they owe. And as I discussed in my video on offer in compromise basics, link to that video at the top of the screen as well as in the description below, there is something called a streamlined offer in compromise program that the IRS offers to certain taxpayers. And just for clarification, because sometimes there's confusion about this when folks call in, this streamlined program does not make it easier to get approved for an offer in compromise. Okay, it simply makes the process a little bit easier. For example, with a streamlined offer in compromise, IRS employees will simply take additional information they need over the phone through a phone call rather than through paper mail, as is the case with a non-streamlined offer in compromise. And prior to the Fresh Start program, taxpayers had to have a tax liability of $25,000 or less to participate in the Streamlined Offer and Compromise program. The Fresh Start program increased that amount to $50,000. The Fresh Start program also allowed taxpayers with annual incomes up to $100,000 to participate in the Streamlined Offer and Compromise program. If you would like more information about the IRS Offer in Compromise program, whether streamlined or non-streamlined, and you owe at least $10,000 in taxes, you can book a free consultation with a tax professional by calling my company, Choice Tax Relief, at 866-8000-TAX. That's 866-8000-829. Or you can fill out the quick form at choicetaxrelief.com. All that information is in the description below. Fresh Start change number 6, extension of time to pay 2011 taxes. On March 7, 2012, the IRS issued its second Fresh Start news release, News Release 2012-31, that opened with, the Internal Revenue Service today announced a major expansion of its Fresh Start initiative to help struggling taxpayers by taking steps to provide new penalty relief to the unemployed and making installment agreements available to more people. So what did this second round of Fresh Start initiatives do for taxpayers? Well, the first thing the second round did was institute a temporary penalty relief on the failure to pay penalty, but only for tax year 2011. This was accomplished by basically offering certain taxpayers an extension of time to pay their 2011 taxes. So in a typical tax year, you can file for a 6-month extension of time to file your tax return. If you cannot or do not want to file it before the original deadline, which for most individual filers is April 15th, or if April 15th is on an applicable holiday or weekend, the deadline is the next business day after April 15th. That's how all tax deadlines work. So if you don't want to or you can't finish your return by April 15th, you can get an extension to file your tax return. It's completely free, by the way, until October 15th by filing Form 4868. Of course, you can file an extension for free online. Every year on this channel, I make a video showing people how to file an extension. However, this extension is only an extension on the time you have to file your tax return and to not be assessed the failure to file penalty, which accrues at a pretty high 5% per month up to 5 months. This extension does not extend the time you have to pay your taxes due. Those taxes are due by April 15th, the original due date of your return. If you do not pay your taxes or a portion of your taxes by April 15th, a failure to pay penalty will accrue on your unpaid balance at a rate of 0.5% per month up to 25%. But back in 2011, with the economy still recovering from the Great Recession of 07 to 09, the government decided to give certain people a break and not only allow them to extend the time they had to file their tax return, but also the time they have to pay their taxes. So under the second round of Fresh Start, the IRS said, if you were unemployed, if you're a wage earner, W-2, and if you were unemployed for at least 30 days between January 1st, 2011 and April 17, 2012, consecutive days, or if you were self-employed and you experienced a 25% or greater reduction in business income in 2011 due to the economy, and if you make $100,000 or less, or $200,000 or less if you're married filing jointly, and you owe $50,000 or less in taxes for tax year 2011, people could file Form 1127A and get a 6-month extension of time as long as they're to pay your taxes as long as you pay them in full by the extended deadline of October 15, 2012. But that was only for tax year 2011. Okay, it does not apply today. Yes, there is still a mechanism and a Form 1127, to request an extension of time to pay, but it's not as easy to get as the 2011 provisions, which applied to a lot of people given what the economy was like at that time. Fresh Start change number 7, expanded eligibility for streamlined installment agreements. If you've seen my video on installment agreements, link at the top of the screen as well as in the description below, you know that if you owe $50,000 or less to the IRS in combined taxes, penalties, and interest, you can apply online for a payment plan for up to 72 months. This is a streamlined installment agreement, and it's streamlined because you can set it up online without having to submit to the IRS a collection information statement, either on Form 433A or Form 433F. These forms basically document all your financial information according to IRS standards that I've talked about in other videos. So now you can set up a streamlined installment agreement if you owe $50,000 or less to the IRS. That is thanks to this second round of the Fresh Start program. Previously, before Fresh Start, you could only owe $25,000 or less to the IRS in order to be eligible for a streamlined installment agreement. and they only went up to 62 months. But today, 72 months, $50,000. And finally, Fresh Start change number 8, taxpayer beneficial changes to offer and compromise calculations. On May 21st, 2012, came IRS News Release IR 2012-53, which announced the third and final Fresh Start Initiative change. This one was to make the offer and compromise program a lot more accessible to more people by changing some of the calculations. So if you see my video on how to calculate your own offer and compromise amount, link at the top of the screen as well as in the description below, you know the general formula is to calculate your reasonable collection potential, which is a combination of your equity in your assets as well as your income. And your income component is based on your net monthly excess income as determined by IRS formulas, multiplied by either 12 or 24 months. 12 months if you can pay your offer amount within 5 months, and 24 months if you can pay your offer amount within 24 months. Well, before the Fresh Start program, if you could pay your offer amount within 5 months, you would have to multiply your net monthly excess income not by 12 months, but by 48 months. And if you could pay your offer amount within 24 months, you would multiply your net monthly excess income not by 24 months, but by 60 months. So due to the changes in this math, the Fresh Start program did make more people eligible for an offer and compromise, at least the Dowdus to collectability offer and compromise, which is the most commonly offer type submitted to and accepted by the IRS. And obviously, by changing the math like this, it did reduce the offer and compromise amounts that many people had to submit and pay. The Fresh Start Initiative also made some more minor changes to the offer and compromise calculations, having to do with student loans and things like that. But basically, folks, that's what the Fresh Start program is. Don't let anybody tell you otherwise. Don't let anybody tell you the Fresh Start program is some special program that you can get into that will wipe away all your tax debt. It is certainly possible to settle your tax debt for less than you owe with an offer and compromise. And the Fresh Start program certainly did make it easier to qualify for an offer and compromise. But the offer and compromise program was around well before the Fresh Start program. If you'd like to learn more about tax relief in general, high-level overview of how we approach tax relief for our clients, be sure to check out this video right here. If you'd like to see a playlist containing all of my tax relief videos, click right here. And if you'd like to visit my tax relief company's website to book a free consultation, click right down here. And I will see you in the next video. Bye-bye.